Hey everyone, welcome back to the Rage Money Community channel. I'm your host, Zhang. Today, I'm going to show you how much I made off of the Monday, Tuesday drop and how much money I've lost off the Wednesday bounce. It's going to be a pretty interesting topic because a lot of YouTubers out there, they don't really showcase. They showcase a lot of their gains, but they don't really tell you the whole story. Like one day you might be up $2,000, but the other days you might already be down 3 to 4, but rarely do they showcase that. And today I'm going to show you how to really try to keep your gains and minimize your losses, and that's how you win in the long run. Every time you gain, you try to keep most of them, and every time you lose, you try to lose as few or as least amount as possible. So as we talked about on our Sunday's video, might be Saturday on September 25th, we were saying that the SPY are trying to climb above this line. Actually, we were using the ES at the time, which is the micro or the E-mini S&P futures. We're saying that they were trying to climb, the bull trying to take over and trying to climb over this line. If they fail, it's going to fail big. And that we said that on the 25th. So you can see at the date at the bottom, this is September 27th. It opened down a little more. And the next day, it down even more. It was down 2% for the day in the E-mini S&P. But what's surprising is actually the NASDAQ. Surprising and unsurprising because the NASDAQ is so interest rate related. So basically what happened in the market on Monday, Tuesday was that there was an auction for the US Treasury notes and bills and bonds. And bills is usually within a year, notes is usually within 10 years, and then bonds are usually within 30 years. I think that day was a treasury, it might be a treasury note auction, and the interest rate actually went up. The effective interest rate actually went up because how that auction works is that they will set a price for the notes or the bond or the bill, and then the price will keep on dropping until someone bids on it. And as the price of the bill drops, the yield increases, so effectively the interest rate increases. And during that auction, basically we had a spike in interest rate, and that panicked the market. And along with other headwinds in the market, we saw a large dip in the market in the S&P 500 and in the NASDAQ and basically everywhere else but the IWM. Why did it affect? So right now we saw on 28th, or we see on 28th, the S&P drop 2%. And what about the NASDAQ future NQ? That day actually dropped 2.83%. It's because that NASDAQ is basically full of a lot of technology stock, and the technology stocks are a lot growth oriented. And if you're working in a low interest rate environment where consumers can borrow money easily, where companies can borrow money easily to spend on growth and focus on hiring good engineers, focusing on marketing, focusing on just growing, with the high growth rate, it supports a high stock price in the NASDAQ. And however, when we have a spiking interest rate where it becomes harder to have access to money, where consumer needs to spend more or needs to pay more interest in order to spend money, or companies don't actually have a cheap access to money anymore, has a projected slower growth rate in the future. And that really worries investors, and that will cause a larger impact on the NASDAQ stocks as they would on the normal S&P 500 stocks. So that's why S&P fell 2.02%, NASDAQ fell 2.83%. So that's a basic analysis of the market. Now I'm going to go over my portfolio and how I fared on those couple days. So going into this week, my portfolio is overall net delta negative, short delta, meaning that if the S&P 500 goes up in value, my portfolio will drop in value because I have a negative delta. However, if the S&P 500 drops in value, the overall market drops, my portfolio value increases. And I took that position because I saw there's a trend line that's been broken and people trying to climb over it. And usually it's a good time to starting to short at that area, near that area. And that's why one of the reasons from the technical side that I entered into that short position. And I've been short delta for quite a bit ever since the speculation on the U.S. debt ceiling default might actually happen. So my portfolio was overall short delta for quite a bit. And I think Monday, Tuesday, I netted around, um, if I remember correctly, about 28 to $3,000. So no, 2,800 to $3,000. So it's a decent and healthy amount, and because there was a huge tank in Nasdaq and huge tank in S&P, and since then I've closed down portion of my SPY puts and portion of my Nasdaq puts, and I started to sell some cover puts, shorter day cover puts to cover, expecting a rebound. And those doesn't really yield me a lot of money because my SPY puts, majority of them expire in on October 18th, October 15th, I think, and some of them expire in November. And I started to sell some cover puts, which means that I started selling puts below the strike value of those positions on a shorter day as well, expiring this Friday or expiring today, trying to make a couple $100 off those. So even today with the balance, if I didn't do anything, didn't do any measure like closing down my short position, or sell cover puts, I might be down, let's say maybe like $1,500, if not more. But today I think I only went down about $400 or $500 in portfolio value. So that's really, really good, because I cannot time the market perfectly, but I can do some logical things in order to capture most of my gains and limit my losses. So over the past 3 days, my net gain is probably around $2,000 to $2,500. So it's a decent amount of gain to my portfolio. I think my portfolio is currently sitting around, I think maybe still a little short delta, but not as much, because I'm expecting some sort of volatility. But I am very much expecting volatility going into Thursday, because Thursday I think is the last day to really pass a bill to prevent a government shutdown. And if they don't prevent a government shutdown, they might have a harder time to try to get a bill to pass in order to meet the debt ceiling crisis. And if that doesn't happen, meaning that if the government shuts down and then they have a harder time meeting together, and that might potentially make passing a bill to stop or to raise the debt limit harder. But this sort of place has happened before, 2018, 2013, 2011, way before this, during the 1950s, people started doing it. So it is right. It is logical to assume that the government will do the right thing and not play around with such a dangerous thing. And that's why majority of the investors don't really worry about that. But that's why when majority of people don't worry about that and don't think about that, that's where the opportunity is. That's when we have to strike and place a decent amount of bet in order to capitalize on that opportunity. So the bet is relatively cheap, by historic standard currently, but it's more expensive now if we want to place a bet like that, because the volatility has spiked up. Market already tanked quite a bit, from the all-time high that we had. Maybe it's like already a 5% drop, or 3 to 5% drop. So it's not as cheap as it was before. But I still have some short position on, and I'm looking forward to what happens tomorrow. And if there is a government shutdown, I can expect more volatility. From a technical level, we might see the S&P drop below, I think it's at 435 right now, and then we might see in the 420s. And in the Nasdaq, Nasdaq is going to be very interesting because they will be impacted the most by the potential increase in borrowing costs, which is the increase in interest rate. All right, thank you for watching this video. I know, hopefully, my explanations on why I did what I did on my portfolio made sense to you, and hopefully by showing some of the gains and losses that I had to you, make sense of my trading logic and thinking. And if you enjoyed the video, please like, comment, and subscribe. I really appreciate the 11 subscribers that I have now. It really motivates me to create more videos, right? That's why at 11 o'clock at night on a Wednesday night, I am here looking at my phone camera and trying to create an awesome video. Thank you.